let's move on and discuss accounting methods. There are generally two accepted methods, cash and accrual, with an occasional use of a hybrid method. Most small businesses are eligible to use the cash method of accounting, which is simpler than the accrual method. There are exceptions where the accrual method is required. However, this occurs mainly with medium to large businesses where production and inventory are involved, such as manufacturing and retail. Most individuals and many businesses use the cash method of accounting because of its simplicity and flexibility. Under the cash method, income is not recognized until the taxpayer actually receives cash or the cash becomes available. Deductions are permitted only in the year of payment. Many times, the taxpayer using the cash method can choose the year in which a deduction is claimed by postponing or accelerating the payment of expenses. For example, let's imagine that John is a painting contractor. He has chosen the cash method of accounting and is a calendar year taxpayer. His last job was completed on December 30th. John did not receive the payment from Mary, however, until January 10th of this year, when he received her check for $5,000. His gross receipts last year from Mary, prior to completing the job, were $25,500. Under the cash method, John should report the $25,500 as gross receipts on his tax return. But what about the $5,000? Under the cash method, that amount is not included because John did not receive it until January 10th, even though the work had already been completed. If he had chosen the accrual method of accounting, then he would have reported the entire $30,500 in gross receipts for the calendar year because it would have been billed as soon as he completed the job on December 30th. Expenses are deducted using the cash method when they're actually paid. Expenses paid with a credit card are considered paid in that tax year, even though that particular balance may not be paid until a future tax year. An exception to this rule occurs when an expense is paid more than 30 days in advance. In this case, it should be deducted in the year to which it applies. An example of that would be if you could get a deal on a 2-year insurance policy, you would take half of the premium you paid in the first year and half in the second. With the accrual method of accounting, the taxpayer will generally report income in the year earned and deduct expenses in the year incurred. The purpose of the accrual method of accounting is to match income and expenses to the correct period. Under the accrual method, an item is generally included in gross income for the year in which it is earned, regardless of when the income is collected. The constraint on the use of the cash method is intended to assure that annual income is clearly reflected. Thus, if inventories are a substantial part of the business, the regulations require the use of the accrual method to more accurately measure sales and cost of goods sold. Businesses using inventory, such as those in the retail industry, may qualify to use the hybrid accounting method. The hybrid accounting method involves the use of more than one method. For example, an entity that uses the accrual method to report sales and cost of goods sold, but uses the cash method to report other tax items is employing the hybrid method. This method is permitted as long as income is clearly reflected. However, a taxpayer that uses the hybrid method to report expenses must also use the hybrid method to report income.